What do you make of the HSBC PMI results? You have the view that China's growth momentum is peaking. I mean, that's quite contrary to the economic data out so far.
Yeah, I think that's right. There is more and more signs that the economy has just picked up a little bit in the last couple of months. It's worth noting this is the HSBC-sponsored PMI. In the past, in fact, this one picked up more of the signs of weakness than the official one. So it's a positive that this one now is indeed picking up some signs of improvement. What I think is very interesting looking forward is, and perhaps people might have the 2009 script, if you like, in mind. At that time, of course, we saw quite a sharp pickup in China's economy. This time around, I don't think we'll see that. What I think we will see is a bit of a grinding, ongoing period of growth around about the 8%. And I don't think, in fact, that we're going to see 9% or something, which perhaps some of the more optimistic people anticipate for next year.
So you're saying 8% is a bare minimum of a growth target by the Chinese government?
Well, as I say, I think that's probably going to be about on the money because, there was clearly a loss of momentum through the middle part of this year. There were some highlighting perhaps that we might see 6% or odd growth into next year. Now we've seen things turn around a little bit quite clearly. Fiscal stimulus is a big part of it. So that's something which won't continue dramatically into next year. But I think there's enough there to see it grow at about that 8%. And as I say, I don't think we'll get much of more of an acceleration from that.
Japan's holding its elections on Sunday. What impact could this have on risk appetites and on the yen?
Yeah, it is a very interesting turn of events there in Japan. Relative stability, in fact, on the political front for the last year or so, but that's all come to an end clearly. It does look like there'll be a change of government. And I guess a lot of people will secretly be thinking that some of this uncertainty is actually a support for the economy, because in spite of, we've seen the recent extension of quantitative easing from the US Fed, but in spite of that, we've seen dollar moving higher versus the yen, which of course is not what people would have been expecting, I don't think, or not what people in America would have been expecting. So it's a two-sided game, of course, and the uncertainty, if you like, in Japan is outweighing the extreme monetary stimulus that the US Fed's pumping out. I think dollar yen higher is a sensible trade. It's not going to run away, though, I don't think. Perhaps on a one-year horizon, we'll see something in the high 80s, I would think, dollar yen.
Lots of hot money flows from the easing we've seen in the US and Europe. What impact will this have on Asia's inflation?
Yeah, to be honest, I look at this non-conventional policy measures that the Fed's put in place, restated again, and of course have been in place for a couple of years now. And in fact, they're not leading to inflation. And they're not leading to inflation for a very simple reason. And that is that whilst this ultra-easy policy, non-conventional measures are very powerful in terms of boosting base money, which is a very small, limited measure of the money supply, if you look to broader aggregates, M1, M2, it's having very little impact. And it's the broader aggregates of money supply that point to the transmission mechanisms into the real economy in the US. So it's not a very powerful policy tool. And I think now that we can look back on the last couple of years when we've had various QE in place, we can see indeed that that's true. So I think it's a little bit of a red herring in terms of a significant driver for the way the markets are going to pan out in 2013.